Hi, everyone. Mike White here. Welcome to this week's blog post. It's a very interesting month, May. We have had a lot of activity, across the country. Obviously, springtime arrives in different places, but the spring housing market is fully engaged. Obviously, we've had some very severe weather across the country, which is, certainly something that can slow some things down. But by and large, we're at the height of the spring buying season, and there are a lot of people out there with pre-approvals out there looking to buy a house. And one of the things I really got to caution you about this week, and doing a little reading and looking at the subject itself, is we're really facing a student loan time bomb, especially for us in the mortgage industry. Um, it's a very, very precarious situation that I don't think there's enough conversation about, to be honest with you. And I go back to the conversations, and I hear them all the time. People with the student loans. It's, oh, don't worry about, people taking student loans, even when my kids were going to school. Oh, don't worry about working while you're at school, or working during the summer. Just take another student loan and don't worry about it. You don't have to pay them until after you graduate and blah blah blah. And then, people graduated, um, and they started moving forward, and especially those who come into the graduation market around the COVID era. And what did we find out? Well, student loans, that they put those into deferment, and there were no penalties for not making payments on those student loans. So a large number of people didn't bother. They weren't paying those student loans, and then because, oh well, they're all deferred, you don't have to worry about them. And then the whole situation over a couple of years with they kept getting pushed down the road, and Biden was out there talking about how he was going to forgive them all. And so people just pretty much just put out of their mind that those student loans were even out there, and pretty much thought that they were never going to have to pay them, or felt an obligation that they were going to pay them. Well, here we are in May, and I don't know if you realize that right now there are more than 5 million people who took out these student loans and either stopped making payment or never made payments at all, who are either already have become aware or are very shortly going to become aware that May 5th was the deadline to go back into repayment on these student loans. And all across the country, the student loan time bomb has exploded. And people are finding out that they're being held in default of these loans. And these defaults are now being reported to credit reporting agencies. And you can just go to the internet and you can look it up. There are more and more people posting more and more articles and stories being recorded about people whose credit scores have dropped 50, 75, 100 points or more because they never went back into repayment. They have defaulted on those student loans. Those loans are considerably past due. And for those people who have come to the table and tried to address the student loan situation, they're dealing with more than just the additional monthly payments, because those additional monthly payments change the budget dramatically. And you have to remember, if those loans were in deferment for 2, 3, 4, 5 years, or people never started paying on, all of these things are just building up, and these payments are far more than what anybody had in their mind ever thought about. Not to mention what we in the mortgage business have to look at, and this is really the point to the conversation today, is reminding you, if you've got anybody that has student loans, or who had those loans in deferment, or whatever the case may be, even if you calculated based upon the old formulas as to what the repayment might be, these people are often finding out that what the industry thought was a proper calculation, these payments are significantly higher. And well, what does that do? And you have to step back and say, what about your clients? What about the people that you pre-approved who were out there looking for a house or found a house and went into contract and they entered into that contract to buy that house, let's just say in April. And you did what you were supposed to do, and all your documentation is clear, and their credit is fine, and their DTIs are fine, and everything else is fine. And lo and behold, you know, that was fine when they went into pre-approval, and now during the course of the process, those student loans are now due, or you have to rerun credit for whatever reason, and you find that their once pristine credit score has dropped more than 100 points, and now they no longer qualify. Or the pricing on those, if they do qualify, the pricing on that loan is significantly different. So the pricing on that MI is significantly different. But guess what? That stuff is going to happen. If it hasn't already happened to you or somebody you know, it's going to happen, because there are people out there who have neglected these things and didn't realize that this was going to happen. And more you're going to hear, more and more you're going to see stories, especially if you've pre-approved these people on a credit report, 30, 60 days ago, and sure, everything looked fine. And sure, you made all your calculations right. And sure, you did all those things you were supposed to do. And sure, the house that they're going under contract in, especially if these people are buying new construction and they're going into these contracts, went into contracts in January, February, whatever, these houses aren't going to be complete until June, July, August, September, whatever. You're going to have to run credit again. And what's going to show up? What's going to show up? You have to get out in front of this conversation. How many people in your pre-approval queue are going to be facing the student loan time bomb? And again, think about this. They go into default on those student loans. Those loans start showing up. How does that impact their others? Could it impact their vehicle loans? Could it impact their existing credit lines? We all can see what happens if somebody goes into default on those loans. Could they come and repossess the vehicle? Could they shut down your credit lines? All of those things we know are possible. I'm not saying they're going to happen. I'm saying they're possible. That's in addition to what was a great borrower at the time no longer qualifies for the loan, or no longer qualifies for the amount of money, or no longer feels comfortable with a house payment that's in that range, given the fact that now they've got student loan payments that they're coming to grips with that they've got to pay back. So clearly it's a conversation that you need to be having with your pre-approval clients. It's a conversation you need to be having around your office. It's a conversation you got to be talking to all the people in the past that you've pre-approved who are casually out there looking, who are, well, I was going to wait till the summer to buy that house. Well, that credit report you ran in February or March or April may no longer be recognizable compared to what the credit report looks like now, if. And the only way you're going to find out what that situation looks like is to talk to that customer and see if they dealt with it, because if they haven't gone back into repayment and work their situation out by May 5th, you could have a big problem on your hands, and you really need to get out in front of it. So as always, if you have questions or comments, it's Mike, imtcoaching.com, and we'll talk to you again next week. Take care.